What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. It's been a wild, crazy week, so I'm finally glad I can post a video. Just got a good workout in. Had if you saw my shorts, keep an eye. You got to hit that notification bell. I'm just encouraging you guys to do that. I posted a video, a quick shorts video regarding Starwood properties. I find this very interesting. And a lot of people said, and I'll even refer to the link in the comment section, about that they're not going to buy it. But this is still a dividend stock that I'm going to watch. And I'm also going to review another dividend stock that I find very interesting, and actually two stocks. And I'm going to give a shout out to one of my most loyal subscribers. I give a shout out to him on YouTube and as well as Twitter a lot every Wednesday on Dividend Warrior Wednesday. So, I'm going to go over two dividend stocks as well. I was thinking about doing one, but might as well do two. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Let me know another thing after you smash this, the like button. Let me know if the sound's off. I'm trying to keep it like distance-wise with this microphone to see how everything sounds. So if it's off, just make a comment in the comment section. I'm trying to mix and match, mess around with combinations. Let's check these dividend stocks out right now. Starwood Property Trust. We're going to go over these guys a little bit. These guys are down. They were in line with the S&P. STWD is a symbol. They're 1823 right now. Average volume is 2.64 million. They were founded in 2009. Market cap is 5.66 billion US dollars. Day range was 1769, 2479. Its day range was 1810 to 1903. And its previous close was 1891. Now there are some negatives, but I'm going to go over the cons that I find very interesting with these guys, why I'm closely watching them. So again, this is not financial advice for entertainment purposes only, disclaimer in the description. Now let's check these guys out. So I'm on their website. Starwood Capital Group is a 31-year-old private investment firm with a primary focus on global real estate. Assets under management are approximately 120 billion, 4,500 plus employees in 16 offices worldwide, a seasoned, stable executive committee that has worked together an average of 26 years and possesses an average of 31 years of industry experience. The investment flexibility to shift between real estate asset classes, geographies, and positions in the capital stack as the firm perceives risk-reward dynamics to be evolving, extensive public markets expertise, having guided IPOs for multiple lending companies, a commitment to responsible investing, as well as fostering, cultivating, and preserving a culture of diversity and inclusion. So that's one thing. Now, the firm, this is what's in. Starwood Capital Group is a private investment firm with a primarily focus on global real estate. Since its inception in 1991, the firm has raised over 70 billion of capital and currently approximately 120 billion of assets under management. Over the last 31 years, Starwood Capital has invested in an excess 240 billion of assets, including properties within every major real estate asset class. So we need to look a little bit further into these guys. So the firm maintains offices in Miami, Arlington, Atlanta, Chicago, Dallas, Los Angeles, New York, San Fran, Luxembourg, Sydney, and Tokyo, Hong Kong, London, Amsterdam. So I find that also very interesting. But we need to know what's inside of it. So sure, they can be really attractive, but what is inside these guys that makes them an attractive dividend stock that I'm closely watching? So these two things I want to go over. So performing real estate debt. With total capital deployed since inception with more than 85 billion, Starwood Property Trust, the leading diversified finance company, core focus in real estate infrastructure sectors. Externally managed by Starwood Capital, Starwood Property Trust focuses on originating, acquiring, financing, and managing commercial mortgage loans and other real estate investments. So again, now they say Starwood European Real Estate Finance, also externally managed by Starwood Capital. They do similar investment objectives to Starwood Starwood Property Trust, geographic focus on Europe. Starwood Capital through Starwood, I was almost going to say Star Wars, the acquisition of L&R Property, operates a special loan servicer in the U.S. and has expanded its product offerings to fixed rate and conduit loans. L&R provides Starwood Capital unique insights into the distressed debt market as the world's largest commercial mortgage special servicer by active balance named special servicer, approximately 26% of all transactions in the MBS universe. So, go over their revenue and history. They have a strong background, okay, but we need to look at the nitty and gritty inside these guys. Let's check these guys out. Now, the trends of their revenue is what still has me interested in them. So this is in millions US dollars. 2016, 784, 2017, 879, 2018, 1,109, 2019, 1,196, 2020, 1,136, 2021, 1,170, 2022, 1,464. So there are some trends in revenue which are good, but check out their dividend history and a few more things. So their FFO, I'm on Guru Focus, their FFO shares outstanding for the fiscal year was 0.17. The FFO per share quarterly was 0.11. So FFO per share for the trailing 12 months ended in December 2022 adds up to the quarterly data reported by the company within the most recent months, which was 16 cents. But FFO is important. Remember, I don't really care about PE ratio with REITs. I really don't. Now, it can be a little bit of an indicator. You can say maybe a small factor with PE ratio because people are buying it or there's something going on. Could raise a red flag, but FFO is the most important thing when it comes to a real estate investment trust. So remember, with real estate investment trusts, 90% of what they make go back to investors. Now let's check out their dividend history. So here's their dividend history. I'm going to start in 2010. It was 33 cents. 2011 it was 40 cents to 42 cents, and it was stagnant at 44 cents. 2013 it jumped to 46 cents. 2014 it jumped to 48 cents. And it was just stagnant the whole time. So I wanted to do an in-depth review on these guys. They have a dividend yield of 10.15%. If you bought one share, you made 192. Payout ratio is 88%. So I'm going to go over just one more thing with these guys because I wanted to do an in-depth review with these guys. So I'm still keeping an eye on their revenue and potentially, not financial advice, but their revenue is pretty strong per each quarter. Now it is down. Net profit margin's up. So cost of revenue, that is an issue. But March, revenue went down. June, it went down 14. September, it went down 18.41. In December, it went down 13.24%. So the thing is, net change in cash is hurting, net profit margin up. But if I see a dividend hike in Starwood, and if their revenue eventually picks up, I will probably buy these guys. I'm not trying to pump a stock, but if I see a dividend hike, potentially something new like Horizon, like I posted a video on Horizon, I went in and I bought them. Attractive, the revenue was jumping up, their business development company, monthly dividend stock. I went in. And if they hike their dividend, because one thing is they are international, bigger, they're juggernaut. Things go well there, I will buy. So I'm not going to make a guarantee, but things look good, I'm going in. So there were a lot of negatives. There still are negatives. more negatives than positives. But if there's a dividend hike and their dividend is sustainable, I may buy them. I just wanted to go over that. Now let's go over the two new dividend stocks, and I'll give a shout out real quick. I got to give you a shout out, Mr. Patel. You've been a very loyal subscriber to my YouTube channel. You've been very active on Twitter, and hopefully the U will start catching up with football. Not the same in Florida. They need a team in Florida to start picking it up. I don't know if Florida State's going to be the team. I don't know if UCF's going to be the team or the Gators. We need the U to be back. So every time I think of the U, I'll definitely send you a message. So hopefully they'll be back there. They got a pretty good coach that knows the area, very good recruiter. So hopefully get some players over there and start catching up again. Now let's check out the dividend stocks. The first dividend stock that I'm going to look at is Kontoor Brands, KTB, sitting at 50.58. Dividend yield is 3.80%, a PE ratio of 11.74. Not doing too hot against the S&P. Attractive as a dividend investor. Average volume 484.40K. Market cap is 2.81 billion US dollars. Year range is 30.98 to 53.83. Day range is 50.02 to 51.18. Its previous close is 51.8. Who the heck are these guys? Let's check them out. So Kontoor Brands, thank you Wikipedia, is an American clothing company. It was a spinoff from the VF Corporation in May 2019 and markets denim clothing, under Lee, Wrangler, Rock and Republic brand names. Kontoor Brands also operates the VF outlet chain of factory outlet stores, headed in Greensboro, North Carolina. So what do they bring to the table? Well, I can just tell you, I do have some jeans from these. Jeans are popular. People wear jeans. Wear jeans in a sport coat. Some, things that people do. They have work jeans. There's a few things that are out there. One I'm going to focus on specifically. So I'm just going to use a female as an example. So these are trendy jeans. Rock and Republic. Kohl's has them with a lot of companies. I actually do have Rock and Republic, and I find them, stylish and attractive. Just very trendy, kind of like my Invicta watches. People that are big into working out, they wear big face watches. I find those watches attractive, as well as the jeans. They do stand out a little bit. So that's one thing that I really like about the Rock and Republic. So, and I'll go over a guy's Rock and Republic as well. So this is on like Amazon Fashion. These are pretty trendy jeans that are very popular. I do have some Rock and Republic jeans. Matches the sport coat very well, and it's very comfortable. And these are the type of things that they bring to the table for people that are trendy into fashion. It's somewhat affordable. So, who cares about $300 jeans? These are pretty trendy and these are pretty attractive. Now let's go over the revenue and dividend history. The one thing that's kind of a little bit of a turnoff, guys, I still think they're not a bad dividend stock, but look at 2017. So the revenue was $830. This is in millions US dollars. 2018, 2,763. 2019, 2,548. 2020, you can blame the pandemic. 2,097. 2021, 2,475. 2022, 2,631. A little bit of inconsistency in 2017, which I'll go over their dividend history. So I'm going to start in 2019. They were 56 cents. 2020 pandemic hit, 40 cents. 2021, 46 cents. 2.48 in 2023. There is some dividend growth, okay, since the pandemic. One thing that's kind of quirks me and irks me, just that revenue trend. Is the dividend going to always be sustainable? I don't see, with the revenue increasing and stuff, I can see a dividend having hikes. Still a high yield dividend stock of 3.74%. That's the only thing that turns me off as a dividend investor. I don't see the revenue increasing. You look at Jackson Financial, you look at eCorp stocks that I have, they're increasing the revenue, they're increasing their dividend. If a recession hits, people might be a little hesitant in buying jeans and stuff. That could cause a problem. It's kind of a trendy stock, but they have a lot of stuff out there. So, people wear jeans, people buy jeans. That's one thing just to bring out. But I have one more for you guys. This one's kind of a remix. So this was mentioned by him. I'm definitely going to do a remix because this one's very hot right now. Corning Incorporated, sitting at 33.26. Dividend yield 3.37%. A PE ratio of 21.6. Average volume 4.57 million. Market cap is 27.37 billion US dollars. Its year range is 28.98 to 38.71. Its day range is 33.02 to 33.94. Its previous close was 33.95. I have to go over these guys. This is incredible. Okay, so let me go over these guys as a company. So Corning Incorporated is an American multinational technology company. It specializes in specialty glass. We're going to go over that. I'm going to go on their website, ceramics and related materials and technologies, including advanced optics, primarily for industrial and scientific applications. The company was named Corning Glassworks until 1989. Corning divested its consumer product lines, including Corningware, Visions, Cookware, Pyrex Glass, 1998 by selling the Corning Consumer Products Company subsidiary, Cornell Brands, to Borden. As of 2014, Corning had 5 major big business sectors: display technologies, environmental technologies, life sciences, optical communications, specialty materials. Corning is involved in 2 joint ventures: Dow Corning and Pittsburgh Corning. Quest Diagnostics and Covenants were spun off from Corning in 96. Quest Diagnostics, huge. Corning is one main supplier of Apple. Since working with Steve Jobs in 2007 to develop the iPhone, Corning develops and manufactures Gorilla Glass, used by many smartphone makers. It is one of the world's biggest glass makers. Corning won the National Medal of Technology Innovation 4 times for its product and process. I'm going to go over these guys with some of their products. Now, we see the Apple thing. Let's go over a few more things. This is what I like about these guys. This is just some things that they bring to the table. Vials, medication vials. Doing a vaccine, if you're doing a medication, antibiotics, you're mixing it. You need these type of little glass container vials in the hospital. Okay, if you need injections, those little vials. So their vials are type 1 borosilicate glass that can increase pharmaceutical fill finish and improve quality, okay, thereby lowering your total cost of ownership. And then there's their glass. So their Valor Glass is a pharmaceutical packaging technology that enhances the storage and delivery of drugs, providing more reliable access to medicines essential for public health. Their pharmaceutical tubing, syringes, cartridges, glass vials. Okay, that's important. Here's the other thing. So they have glass packaging. Okay, they have a joint venture agreement with a venture capital group in China, though I don't trust China. U.S. Department of Defense Health and Human Services select Corning Valor glass packaging to accelerate delivery of COVID-19. So that's very interesting. They got other stuff too. So here's just their life science product portfolio. They bring a lot of stuff to the table. Advanced services and EMs, bioprocesses, cell culture, diagnostics, equipment, liquid handling, glassware, chemistry lab and all that, filtration, general labware, microbiology stuff. I mean, how many times have I had to send down urine for patients? Microplates, permeable supports. I mean, this is insane. So applications, science of life, there's just some information they like to promote right here that they do. I like this with their labware. Every hospital needs labware. Glassware, people need glassware, okay, in the chemistry labs. Liquid handling. I mean, I'm just going to repeat this. This is high in demand. Cell cultures are pretty important too. You know, trying to figure out which bacteria it is, or trying to figure out what is growing. Special, was it MRSA and all that? Who knows? In a microbiology lab, but these guys are important. Why these guys are important and in demand. I'm going to go over their revenue and dividend history. And their revenue has been fantastic. So you're in demand, your revenue is going up a little bit better than past two stocks. 2016 millions US dollars, 9,390. 2017 10,160. 2018 11,290. 2019 1,503. 2020 a little bit of a dip. You can blame the pandemic. 11,303. 2021 14,082. And 2022 14,189. Huge increase in revenue from 2016 to 2022. GLW is the stock. Now let's go over their dividend history. Literally getting like hiccups, like chugging my coffee, but gosh, the coffee's so good when you're at home just chilling. All right, let's check out the dividend history. And the dividend growth is incredible. So 2014, it was 10 cents. 2015, it was 12 cents. 2016, it's 14 cents. 2017, it's 16 cents. 2018, it's 18 cents. 2019, it's 20 cents. And then it jumped to 22 cents. And then 2021, 24 cents. 2022, 27 cents to 28 cents. Dividend growth in 5 years is 10.03%. That looks pretty attractive. Number of dividend increases in the last 5 years is 5. You bought one share, you made 112 with a 3.30% dividend yield. Payout ratio is 52%. So I just want to show you right there. They're sitting at 33.26. Now, I think these guys are underrated, really underrated. They're in demand. So I just wanted to go over this one. This one is probably out of all three out of all three, this one's probably the best one. GLW is Corning. Of course, this is not financial advice for entertainment purposes only. Disclaimer in the description. I wanted to reveal you these 3 dividend stocks. I really hope you enjoyed this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell. Don't miss future videos. I will have a video for you tomorrow. Have it showing up that you can see it, what time it's coming up, because it'll go live, and I'll try to chat with you guys if I'm around. You guys take care and have a great Friday.